into the other categories that are on there. But again, you stay within the controller's amount. So if you show a transfer in on the controller's report, you're going to have to detail it staying within that total so you balance there. So we'll detail those amounts and show those. Here's the actual form. We're going to talk about the various sections of it. At the top, we do have our required set-aside, where we compute how much was required and was that amount set aside. And then ultimately, down below, we're going to do the other sources. Let's look at that set-aside. Here, for this project area, we're going to show 100% of our tax increment received. Here, the total gross allocation. Then we're going to compute whether it's a 20 or a 30% requirement. As I say, most agencies are 20%. 30%, I think if you've amended, if you did a full SB 211 amendment, you may have a 30% requirement, but most agencies are 20 at this point. And that computation then is going to yield what is the set-aside amount here. Once you've computed that, then we're going to have lines down here to show what happened with it. Is a certain portion exempted under a specific section of the Health and Safety Code? Has an amount been deferred? It's unlikely we'd have many agencies ending up in deferrals because deferrals are very unique under the Health and Safety Code. Those were way back when the low and moderate law came in. So it's highly unlikely most of those are still continuing, but possible. Anyway, if you had one of those, you back it out getting to what your net deposit should be into the fund. And that's the amount that should be there. Then below we have other revenue sources coming into the low and moderate housing fund. Let's take a look at those on here. Various forms, interest income. Low and moderate housing is required to get its share of interest. You may have rentals, rental lease income, real estate, possibly some bond admin fees if you've got bonds outstanding where you charge an admin fee from low and moderate. Loan repayments, debt proceeds, and maybe miscellaneous items that are not covered elsewhere here. So if you have other items here, just do not label this as a transfer in. They don't want to see those. Here you'd have to identify if that transfer was a developer contribution. You break it out and say what it is. So HCD now can see what the sources are. And that gets us to our total receipts for this project area. And we'll have one of these for each project area. And on the online system, I think you probably have separate screens for each project area where you indicate the same information. Later on this afternoon, I think you're going to be going through the online system. Now, once we've done one of those Schedule A's for each one of the project areas, we now have a total revenue for each one of them. We've computed the set-aside and arrived at total revenue applicable to that project area. So Schedule A is for each project. When you get to Schedule C, that's an overall type approach, and now we're looking at the low and moderate housing fund in total. Here, we're going to bring that revenue in. We're going to start from an available fund balance position here, available equity, and which has the unavailable amounts removed, and that's going to agree with the prior years. And then we're going to bring in these revenue and expenditures, and I'll show you how that works there. But Schedule C combines in total. So if you have a low and moderate housing fund that's combined, then basically it's going to be Schedule C in one item there. If you have multiple project areas that are feeding, then you're going to have to add all those multiple project areas up. That's why it's beneficial to work from your controller's report, because you've already added all those up on the controller's report. There's one column on there, which is a low and moderate housing column, and that will be added up on there. If you have your low and moderate housing fund broken down into two components, one debt service, one projects, and those are separate funds, those two must be combined for reporting here. So you're reporting your total low and moderate housing activity here. Page 1, we have our beginning balances, our beginning balance of available equity. We then bring in our available revenue from all of our Schedule A's we've just talked about, and we bring in any other revenue that's not assigned to a project area. And a combined low and moderate is not assigned to a project area. And I'll show you how to report that. Under the HCD reporting, they're not like the controller. The controller has a separate, if you want to call it, project area established for a low and moderate housing fund combined. The HCD does not. They do not want to see a separate one established because that miscounts the number of project areas. So they want it handled on Schedule C, and I'll show you where that is detailed. The basic form of Schedule C, this is what the form generally looks like, starting into it. We're going to blow these sections up again, obviously, so you can see them here. But we do have a general area of beginning balance coming down to get our receipts and then hitting our totals. So this is where beginning equity is and where our project area revenues come in. We start with the beginning balance, and this number must agree with last year's HCD forms. I think it's line 5 on the schedule. See, we'll show you what that number is. But you have to carry it over. If you need to adjust it for some reason, here's an adjustment area. We'll talk about that. Then you bring in your receipts and ultimately come to a total resources here, item here. And these are available resources. So they're going to have land held for resale removed. They're going to have rehab loans removed because those are balance sheet type items. We're looking strictly at items that are available for low moderate activities here. If your balance here starting is wrong from last year, then it can be adjusted here. And if you didn't follow that concept of available resources, you can adjust it here to get to that concept. And you may have to do that to reconcile. As I say, start with prior year, so you always agree, and then do any adjustments you've got here and explain what those adjustments are. That way HCD can see why it's being adjusted and what the reason is, rather than just coming through and adjusting the opening balance, then you don't agree. Now, when you have a combined low-moderate housing fund, all the revenue associated with it, other than the tax increment will be shown on each individual Schedule A, but all the other income coming in, the interest earnings, sale of land, whatever, will not be detailed on Schedule A because you don't have a Schedule A for it. Instead, you're going to detail it here in this other revenue area here. And you're going to basically list down combined low and moderate interest income, so much, rental income, so much, sale of land, so much. You detail it there, and that way it'll be reported properly. They will not count as additional project area. This is the way HCD wants that done. Now, we also have some informational notes again down here, and primarily, again, they're going to be talking about these non-GAAP type items again and talking about transfers. As we're going to say here, many of the amounts, come right from the controllers, don't need to be redetailed. You should be following your controller's report, revenue and expenditure statement as you're going along here, taking those amounts initially for our first pass through this on that. They do not allow transfers out. Those have to be detailed. So if you transfer to a debt service fund to pay your bond interest and principal, you need to detail that transfer into the bond interest and principal amounts on there. If you transferred for some other project cost reason, then you need to detail why you were transferring to that other project cost. So it has to be on there. And again, we're using that non-GAAP basis, which is in effect, we'll talk about this coming up, but it is in effect taking out those non-available items, which are land held for resale and which are rehab loans in there. And we'll show you how to account for those aspects. Now, expenditures start on page 2 of the forms, and we use the controller's report as a guide. We detail the amounts on there, putting them into the proper classifications, if need be, breaking them down. We break down the transfers out. So those are reported for the purpose for which they were made. Any other changes in our available assets will have to be detailed there. We're going to show you how that's done to get from, in effect, a total fund equity basis to this available fund equity approach. Here's the first part of that. We'll take a look at here. I say the expenditures here are starting to be listed. They are not always the same classifications as the controller report. You may have to break down some additional items. Sometimes they have additional notations on here indicating, it's from the controller's report. But make sure the descriptions and classifications jive and are correct here, so you're not just putting items in the wrong area. Looking at the beginning of it here, we start off with our acquisition of property and building sites, various things, land purchases, acquisition expenses. These are right off the state controller's chart of accounts here, operation of acquired property, relocation costs and payments. So here you're not having to do many details. This comes right off the state controller's classification. And you can see the notation here that there's also one up here like these housing fixed assets. If you reported to the controller that you purchased fixed assets, it should go here. Land purchases, land held for resale changes go here, and we'll talk about how that has to be reflected. So you get a subtotal. You then have subsidies from low and moderate housing. Now these classifications are different than the state controller. The state controller has a subsidy line, but you have to break it down to first-time home buyers, rentals, affordability, or other. So this is where you have a line on your controls report you have to detail, and your project people may have to go back and get that detail for you. But in total, we should agree with the classification subsidies from low and moderate housing on there. So those are the first areas. Then looking at our debt service area here, we have our principal and interest on bonds, principal here, interest here. You may have to detail that from a transfer. If you transferred out to a debt service fund, then you have to break down the amount you were transferring for principal and interest on there. If that amount you transferred was net of some interest earnings that the trustee had, then you're going to have to reflect the interest earnings as revenue and gross up your amounts here. But in total, the net amount of that should be reflected on the controller's report and here also. If you paid other debt with it, show that on the other debt line. These are right off the same classification as the controller. Debt issuance costs, other types of debt servicing, getting a subtotal. Now the area near and dear to most agencies, admin, planning and admin costs. There was also a report that was done by the Senate Committee on Oversight and Outcomes looking at admin costs. And obviously the state is looking at admin costs. They always have. The advocates up there have looked as to how much is being charged for admin, etc. So you want to properly reflect your admin costs. Now the approach taken by HCD and by the controller's office is if you've got administrative costs that relate to a project, whether that project be construction or rehab loan administration, etc., those costs should be shown in those areas. So you should show that in the rehab loan area. You should show it in the construction area. You should not show it as general admin costs. And that's their philosophy and their approach. So basically that's a way to lower the administrative cost you would show here. And you should use that general philosophy on your controller's report and on your HCD forms both. So don't just throw amounts in here because it comes off your general ledger and comes off as basically salaries and wages. If those salaries and wages and other administrative costs relate specifically to a project, they should be shown as such in there. So if they relate to planning here, then they'd be shown on the planning line, not on the admin line. So we want to make sure we're not over-reporting the amount of administrative costs and causing concern of the advocates there of doing that, but properly report how much you've actually spent in general administration. So that's the administrative, planning and administrative area. Now the next page is a continuation of expenditures. Again, we're using the category similar to the controller, not exactly the same, so you may have to detail some, but you want to stay within the amounts shown on your controller's report. So we do balance. Let's take a look at these areas. Again, it's not always the same. We got expenditures for on and off-site improvements. This is basically your construction type areas you've done. But it wants some detail. What kind of housing construction have you done? What kind of housing rehab have you done on there? What have you done in relation to mobile homes on there? So some of these require detailing out of your breaking down the amount of expenditure shown. Now there is a transfer area here, but notice it's very unique. Only for very transitability things under a certain code section. Only for excess surplus transfers. If you've got an excess surplus situation, which we'll discuss later, you are allowed to transfer to a housing authority, and basically that would be an area where this line would be used. And then we have other transfers are allowed to be put, but you have to specify the code section under which those transfers are allowed. So it's very unique. General operating transfers should be detailed by the section to which they relate. Now, if you have something that doesn't meet the classifications, it can be shown as miscellaneous. Here on this example here with actual data, I've done that.
Don, we have a question on where do you put funds used to provide down payment assistance loans? Would that go there on line K, 4K?
Probably, and that's some kind of other type of assistance type thing there. So the other expenditures, loans, yes. You'd probably detail it there.